Hey guys, Tatiani Favors here, your tax business coach, and today we will discuss how to legalize your tax business. Okay, and so what is on the agenda today? We're going to discuss which entity structures you should choose and compare all five. An entity structure or business structure, they can be used interchangeably, they mean the same thing. We will also discuss what an EIN is and how to obtain your EIN. So let's hop right into it. The first step in becoming a business owner is to create a business entity that separates you, the individual, from your company. That is always the goal. And so, one of the decisions that you as a business owner must make is what type of organizational structure your business is going to use. There are five main types in the US. And so, one is sole proprietorship, limited liability company, the LLC, a partnership, a C corporation, and an S corporation. Now, a sole proprietor is someone who owns an unincorporated business by himself or herself. It is the simplest and most common organizational structure because it has no structure and it provides no protection for business owners. And what this means is there is no separation when you are a sole proprietor. There is no separation between you, the individual, and your company. As a business owner, you definitely want that separation because, for an example, worst case scenario, your company gets sued, okay? That person can pursue, if you are functioning as a sole proprietor, that person can pursue both your business and personal assets. Whereas if you have some type of business structure set up, and your company gets sued, they can only pursue your business assets. So your house, your vehicles, your personal assets will not be up for consideration. Typically, when I explain it like that, people understand and they see the importance of making that distinction between you, the individual, excuse me, and your company. Now, if you do decide to function as a sole proprietor, meaning you say, hey, I have a business, I'm going to engage in business activity, and I have filed no paperwork to separate myself from my business, then you will report your income and expenses on the Schedule C, which is a worksheet that's a part of your individual tax return. You will also be subject to paying self employment taxes. Now let's talk about some separation now. The limited liability company, aka LLC, excuse me, it is one of the newest organizational structures, kind of like the new kid on the block. Although an LLC is has been around for a while, it's the newest structure and it's not identified by the federal government. It's more of a state statute, okay? And so don't get me wrong, it is legal. It's more of a state statute, and it does give you that separation that I will continue to talk about throughout this presentation that you want, that you certainly want, okay? It does provide the protection, that separation, and you can have one or more members within an LLC. Within an LLC, the owners, they're referred to as members. So in an LLC, you have members and not owners. Uh, like a sole proprietor, an LLC, they report on the Schedule C as well. If they are a single member LLC, meaning just one owner, and is also subject to self-employment taxes. Now, if the LLC has multiple members, meaning two owners or more, then they will file a partnership return, which reports on Form 1065, which is separate from your individual tax return. It is a separate, more informational business tax return that is required by the Internal Revenue Service. A partnership is when two or more people join together to run a business. And so, similar to a sole proprietor, The partnership reports their income on their personal tax return and pays self-employment taxes. But partnerships are considered a pass-through entity, which means the partnership itself does not pay taxes. What happens is any profits or losses generated by the partnership will then flow through to its partners. And then the partners will report those profits or those losses on their personal tax return. What speaks between the two are K1s. The K1 is like an intermediary between the 1065 partnership return and your 1040 individual income tax return. And so now let's get into the corporations. Excuse me. So there are two common types of corporate structures. You have the subchapter S and the subchapter C corporations. And the main difference between the two are they just have different tax rules. So ordinary corporations are considered to be the subchapter C corporation. And then the subchapter S corporations, they're a pass through entity, whereas C corporations are not. And so C corporations, they are the most complex organizational structure. And I'm sure some of you have heard before, but maybe not. But a lot of people, when you think of C Corp, you think double taxation. And this is because unlike the partnership tax return with a C Corp, the corporation actually pays taxes on any profits that arrives from the C corporation. So the corporation itself pays taxes at the corporate tax rate, and then any profits that the owner receives from the corporation, then the owner will then pay income taxes on that money as well, double taxation. As when we said a partnership, it kind of flows through. The partnership doesn't pay taxes. Very similar with an S corporation. An S corporation is considered a pass through entity as well, meaning the corporation doesn't pay taxes itself. Any profits or losses is passed through to the owners for the owner to pay income taxes on. The cool thing about an S corporation, though, is, excuse me, you do not pay self employment taxes on your individual tax return. Unlike a sole proprietor or an LLC, you don't pay self employment tax. You will only pay income taxes on your individual tax return. The other cool thing about an S corporation is you don't necessarily have to be an S corporation in order to get taxed as an S corporation, meaning you can be an LLC and elect to be taxed as an S corporation. You would file Form 2553 to the IRS to elect to be treated as an S corporation. And what that does for the existing LLC is it eliminates those self employment taxes. I know you hear me speak about self employment taxes a lot because it matters. When you are filing your individual tax return, everyone pays income taxes. But if you're self employed, you not only pay income taxes, but you also pay self employment taxes. If you're an LLC and elect to be taxed as an S corporation or an S corporation, you eliminate those self employment taxes. And so that's why it's so important to know the different ways that these business structures are formulated and how they can work for you and what your goals are what you want to accomplish with your tax business and and what type of taxes you want to pay. It's all pretty much a game. I hate to say that, but the more you know, the more you can play, the more you will benefit off of the different tax versions that each of these structures hold. And so now, once you have formatted your entity, now let's identify it with an employer identification number. And so, an employer identification number, aka an EIN, is to a business what a social security number is to an individual. Like there are no two social security numbers that are alike. There are no two EIN numbers that are alike because it identifies your business. And so talk about how to obtain your EIN. And so I have put in the description a link that will lead you directly to the irs.gov website so you can apply for your EIN. You must follow the directions listed, and it literally takes 10 minutes or less. You have to have your business formation already. So if you're a sole proprietor, you cannot get an EIN. It's only for if you are an LLC, a C Corp, an S Corp, or a partnership. Just a brief pointer in order to receive your EIN immediately, when you are asked how you would like to receive your official EIN letter, choose to print to your PDF and save to your computer versus having the IRS mail it to you, because one, you'll have an electronic copy of it and you'll have the official letter more accessible much quicker than if you would have the IRS mail it to you. Also, if you want to open up a business bank account, which I strongly encourage, you would want to have access to your official EIN letter, which is required to open up a business bank account. The EIN letter from the IRS and your articles of organization if you are an LLC, or your articles of incorporation if you are a corporation. Those two things are required. Then, in addition to whatever bank application your specific bank requires, all of those things are required in order to open up a business bank account. So, guys, that's all for this presentation. I didn't want to make it too long, but I have a few links in the description. So if you want to read more about each of these business structures, you surely can. I strongly encourage you to separate yourself from your tax business. If you want to be treated and respected as a tax business, you have to become a business. It's just that simple. So subscribe to my YouTube page, like this video, share it. And until next time, you all, I am Tatiani Favors, your tax business coach. Peace.